like that, you don't know. I can't wait to get you all alone. Once I'm in, there ain't no letting go. My mind games until you lose control.
Morning, ladies and gentlemen. What's up, traders? What's going on? Welcome back and happy Money Monday. Woo! I'm excited to be here. I'm excited to get to work with you, and I am so excited to end this month on a strong and profitable note, guys. We got about 2 days. Well, we don't have about 2 days. We have 2 days until the end of October. I'm a little upset because October's been an amazing month. I mean, you guys have been absolutely crushing it. We've been seeing some milestones hit. You guys are crushing your goals. You guys are crushing the market day in, day out. I'm having a really good month as well. One of the best months I've had quite a while. And when I say one of the best months, I mean just a really consistent month in the market. And it's been an amazing October, guys. So I'm really excited to finish off the last 2 days. A little upset to finish off October because October's been so nice. But we will see what we have for November, December. Got 2 months to go, baby. Super excited to keep rocking and rolling. Keep on moving the needle, locking in such amazing profits, and really just helping you guys each and every day crush it in the market, attack it, and again, help you guys hit your goals. So before we dive into the pre-market rundown, inside of chat right now at this point in time, you guys know the drill. Y'all need to be hitting me with a big old Alpha Day Trading good morning if you haven't done so yet, but everybody's always on top of it. What's up, everybody? We got Joe, Tyler, Stirs, Zach, April, Trader Adam, Joey, Craig, Kevin. Man, I mean, every day we got a couple new people joining, and I just don't have enough, enough breath in me to get everybody's name all at once, and I try. But good morning again. Happy Money Monday. Hopefully you guys had a wonderful weekend, and most importantly, hope you guys are ready to rock and roll and ready to attack the market today. And if you guys are over on YouTube right now for the pre-market rundown, again, good morning. Hopefully you guys are ready to attack it, and I hope you guys had a wonderful, wonderful weekend as well. So hit me with a big old good morning, and then drop your location as well. Where are you guys tuning in from? We got Andrew Dunn over on the tube. Good morning, Andrew. Shady, what's up? S. Moore. Whoa, Jay, what's going on? What are you trading today? That's what we're getting ready to dive into, guys. The pre-market rundown is a live stream that I put together Monday through Friday from 8:30 till about 9:30. It really just depends. But again, we give you guys the rundown for the day, right? What's the overview for the market? What do we need to be mindful of? What's going on today, okay? What is my analysis and my expectations with the SPY and the Qs? What are the top large cap stocks that I'm watching for today? What are the top penny stocks that I'm going to be watching for today? Really just get you guys as prepared as possible, build up that confidence so you guys can come in strategically and lock in some profits. So we're going to give you guys the complete overview, the breakdown as far as what am I looking to do today, what am I looking to trade, and why, and back everything up with some solid education as well. Today, before we really dive into it, right, my risk assessment based on just kind of, assessing the current market conditions, what do we got going on today, what do we have going on tomorrow and this week, right? It's a very data-heavy week. The earnings calendar is just absolutely jam-packed full with earnings. So, coming into the market today, understanding what we have going on this week, it's a very data-heavy week. We'll dive into that here in a moment. Again, we got a lot of earnings dropping this week as well. You know, right now I'm rating the market like a 3 or a 4 for today, just based on, you know, the complete overview for this week, my outlook with what we have going on and what we historically see on Mondays leading up to, say, the Fed's interest rate decision on Wednesday. Again, this Wednesday, if we just go ahead and take a deep dive into this week's economic calendar, we can see that it is a data-heavy week. Got a lot of key data dropping tomorrow. Even more key data dropping on Wednesday morning, such as JOLTS job openings, ISM manufacturing data, and then we do have the Fed's interest rate decision coming on up at 2 p.m. Eastern time on Wednesday, followed by the Fed press conference on Wednesday. Then again, you got more data coming on through Thursday, Friday. It is a very data-heavy week this week. Today, you're pretty much in the clear. You don't really have a lot going on. You do have Dallas Fed manufacturing index data dropping here at 10:30. That's of medium importance. That's definitely something to be very, very mindful of if you are in a position. Maybe you want to have a stop in the system. Maybe you want to flatten your trade just to mitigate risk. But today, you're pretty much in the clear. If you take a look at this week's earnings calendar, you had a lot of, the earnings pretty much dropping this morning. So if you go on up, what did we have this morning? You had SoFi, you had McDonald's, and quite a few other ones. These are the most anticipated earnings reports of the week. Tonight, you have, maybe Pinterest, right? But again, what are the big ones that everybody's really looking at, right? We got AMD dropping tomorrow after the close. We got PayPal, Qualcomm, Roku Wednesday after the close. And then the big boy, Apple, reporting Thursday after the close as well. So again, you got a lot of earnings dropping this week, just like last week and the week before. I mean, last week was a pretty hot week. We had about 30% of the S&P 500 report last week. You had 4 of the 7 Magnificent 7 stocks report last week as well. And that's really one of the biggest catalysts, right? Earnings, not so great, lowering guidance, and these stocks fading and falling, which is overall pulling the SPY down and the Qs down. Why is that? We talked a lot about this last week and why last week was such an important week, right? You look at the Magnificent 7 stocks. That's going to be, Apple. That's going to be NVIDIA. That's going to be Meta. That's going to be Google, Amazon, Tesla. You had 4 of the 7 report last week. And why is it even important to even focus on those 7? Because those 7 stocks are up combined 100% year to date, which is insane, right? If you strip those 7 stocks out of the S&P 500 and just look at the 493, it's like the S&P 493 is down like 15% year to date. But the SPY is technically still up year to date. Why is that? Because those 7 stocks combined are up 100%. So last week was a very key week, right? Because again, most of the S&P 500, not most of it, but a good majority of these top holdings reported earnings last week, and those stocks are up substantially year to date. And we saw a lot of these stocks, decline off earnings, and that pulled the overall market down even further into what we are now in correction territory, especially with the SPY. So again, with that being said, last week is a key week. This week's a pretty important week as well. We do have Apple earnings, which is about 7% of the S&P 500 reporting earnings this Thursday after the close. Not only that, but you got a very, very data-heavy week as well, right? Traders are going to be just basically waiting for the Fed's interest rate decision, and then followed by, Jay Powell's remarks at 2:30 on Wednesday. So why do I want to start with the economic calendar and really overview what we got going on for this week? Because that could set the tone for the week and really give us a great idea as far as how should we look to come into the market today. How am I assessing the market conditions? How am I assessing risk? How am I trying to get prepared before the market even opens? Really just understanding what we have going on today and this week. And looking back, historically, when we have the Fed's interest rate decision, right, Monday and Tuesday, it typically is really choppy, right? And so it's like based on everything we just discussed, based on looking back over the past 12, 18, 24 months, we know that 80 to 90% of the time, when you have the Fed's interest rate decision Wednesday of the week, Monday and Tuesday are sometimes really, really choppy, right? So that's how I'm coming up with that 3 to 4 assessment as far as market conditions. What are my expectations, right? Maybe like a 3 or a 4, subpar, probably choppy. So does that mean I want to be risk on today and be aggressive? I mean, probably not. Probably want to size down a little bit, be very, very mindful of my risk as always, but not be aggressive. And the biggest thing for me is closing out the month strong and profitable. So really focusing on capital preservation, right? Preserve the capital, right? Really just lock in a great month because we've all had a really good month. The last thing I want to do is not do my market assessment and say, you know what, I'm going to go balls to the wall today and then give back $1,000, $2,000, $3,000 of my hard-earned profit that I worked hard for, especially when, again, today could be a really, really choppy day just by taking some time to get prepared, what's happening today, what's going on this week, and then trying to do my best to assess the market, right? And that's where I come up with that 3 or a 4. And so that means that my assessment risk-wise today is pretty neutral. I'm going to make sure I'm super mindful, not trading too aggressively, keeping my losses really small, which means my wins may be small. But if I can lock in some base hits and add to the bottom line, I will. But I'm not going to put myself in a position to give back a lot of these hard-earned profits. So again today, guys, looking at the economic calendar, 10:30, Dallas Fed manufacturing data, and that is some data that can absolutely move the market. So the first thing that everybody should be doing right now at this point in time, going right to the SPY, going right to the Qs, and grabbing yourself a vertical line and then timestamping 10:30. Why do we timestamp 10:30 with that vertical line? Because let's be honest, we know that we have data dropping at 10:30. But when the market opens on up and we are dialed in and we are ready to rock and roll and there's so many things going on, we may just lose sight of the fact that, hey, 10:30 is data. We may be blind. We may be in a trade and then boom, something happens and we just get rocked out of that position. So again, it's just a nice thing to put in front of your field of awareness. Like, hey, what's that blue line represent? We have data dropping here at 10:30. And so just be mindful of that, right? Manage your risk. Put a stop in the system, right? Have your finger on the trigger. Maybe you want to just flatten your position altogether or not take a trade right at 10:30 if you see something and just wait a couple of minutes after data drops to see how the market reacts. But other than that, that's really all you have going on today, guys. 10:30 data dropping. And then you do have 3-month bill auction and 6-month bill auction here at 11:30, but that's not the type of data that's going to really move the market. All right, guys. So let's dive right into the SPY, right? My overview, my analysis. What's my game plan for today? Really making sure that you guys are super prepared, confident, ready to attack this market strategically, okay? Again, I'm like a 3 or 4. There's not a whole lot that I'm seeing. All right, but we're just going to come in unbiased like we always do, give you guys the zones, the levels, and really set some expectations and really break down my game plan for today. And the biggest thing with my game plan is sitting on my hands, being very, very patient, and not, right, over trading, not being too aggressive, really being disciplined, super patient, and just wait for the market to come to me. And if the market gives me an opportunity, fantastic, I'll take it. But if the market just sits sideways today and doesn't do anything, it's a no trade day for me, right? Sometimes the best trade is no trade, and cash is a position. So I am absolutely okay with not taking any trades today if that's what happens in the market, if there's just no opportunity. But let's go ahead and again, give you guys the breakdown, all these key zones, these key levels on the SPY. And again, make sure that you guys are super prepared. Before we do dive into it, though, if you guys are on TikTok, you guys want to come to YouTube for the pre-market rundown. That's where you guys are going to see the charts, the analysis, the visual representations, the examples. Just overall a much better format than here on TikTok. So links are in my bio. Head over to YouTube. Join the pre-market rundown. And like I said last week, if we ever get 100 concurrent viewers and 100 likes on the stream, I'm going to pick one person and give you a free membership to our program. Then when we hit 200 people, same thing. I'm going to pick another person and give away a free membership. 300 viewers, 4, 5, 6. And that's an incentive for you guys to come on over, get prepared, right? Get these game plans for the day, have some fun. And who knows, maybe you guys are a lucky winner for that giveaway if we do hit those 100 viewers and 100 likes. But let's dive into it. Again, we always start with the daily time frame, and we just really start identifying all of our key areas. Key zones of, say, support resistance. Just where can we see the market go and have a high probability of seeing some type of development, some type of opportunity that we could simply just react to, right? That's letting the market come to us. Identify these key high probability significant zones of support resistance starting on your higher time frame. You want to go monthly, weekly, go weekly. I personally go with the daily. Right? And I mark up all of my key areas. And then I go right into my lower time frame, make my fine-tune adjustments, and make sure I'm not missing anything. And then from there, I let the market open, and then I let the market come to me and provide me with an opportunity versus me chasing after the market, right? And if you feel like you're always chasing the market's moving, you're going after the market, you're hunting for opportunity, and you're not really just calm, cool, collected, just sitting back, waiting for the market to come to you, this is the process that you guys need to follow on a day-to-day basis to really just make sure that you're coming in strategically. And again, be really patient, be disciplined, wait for the market to come to you. If it comes to you, let it set up, let it provide you with an opportunity. You're going to start to notice you're a much better trader by really approaching a market in this fashion. So what do we got going on with the SPY? Let's go ahead and hit on a couple of these key areas that we identified right from the daily. Okay, so right now you got some key support down between 411.60 and 412.03. Okay, so that's going to be our current line in the sand when it comes to support. So this is our current support line in the sand. Your lits, okay, that's going to be that zone between 411.60 and 412.03. Then you have your key overhead zone of resistance. Okay, that is your lits, your line in the sand when it comes down to resistance. That's going to be a make or break as far as where can the SPY be headed today. That zone is between 414.19 and 414.62. That zone of resistance overhead, that is your lits, your line in the sand when it comes down to resistance. And what do you see right now with the SPY? You're just sitting right in the middle of those two key areas. But these are your two key make or breaks, okay? Because if you see the SPY open and come on down into that bottom zone and you hold on up, that's a line in the sand, right? If you come down and hold on up and we have good price development, we can definitely get long on up into this overhead zone of resistance, right? It's very simple, very clear cut. Let the market come to us down to this lower zone of support if that's where the market comes, okay? Let it develop. Let there be an opportunity that presents itself. And if there's solid reason to get long, we'll get long. Where to? Our next overhead key zone of significant resistance, which is going to be this overhead zone that we just discussed. But what if, right, the market opens and we come down into this zone, your line in the sand, and we crack below it and can't get back above it? Well, that's going to be an indication. Go ahead and get short for the next leg down. Where could we see the SPY pull back to today? Well, I would say back down first into Friday's lows, okay? And that's going to be a lower zone down between 408.64 and 409.22. That would be the next key area that we could see the SPY get down to today, right? So you have your first key area, that zone of support, your line in the sand, and we have two game plans established, okay? And why do I like to have an opposite plan in place just in case, right? We talked about possible calls if we hold that zone of support. But why am I even taking the time to build a potential short plan, right? Because who knows? What if the SPY comes down and we don't hold that zone and get confirmation to play calls? What if we crack and retest and we start getting confirmation to take puts? You don't have to scramble. You don't have to start building a plan. You already have a plan established, right? We have a long plan in place, then we have a short plan in place. We come in very unbiased, very neutral, and we just wait for the market to come to us and provide us with opportunity and just make sure we're on the right side of the trade. And so, again, we always come in with, our main plan, but we always have the opposite plan in place, again, just in case the market wants to continue lower today, right? But here's the deal. We have two plans established if we come down to support. We know what we could see to play calls and what would need to take place to play puts. Okay, so there's your two plans if we come down into that main zone of support. Very simple stuff, guys. It's not complex. Just requires a lot of discipline and patience to wait for the market to come to you, and then being able to sit back and read the market correctly. Read how the price is developing. Look at the order flow, price action, volume. Do we have multiple reasons of confirmation to take a trade, right? There's a lot more to it, but again, it is really, really simple to get prepared. So what are going to be the other two plans we have? Well, that's if the market opens and comes up into this key zone of resistance, right? And that key zone of daily resistance is between 414.19 and 414.62. So if we see the market open and push on up into this key overhead zone of resistance and we see good price developments and we cannot break higher, this would be an area that I would be looking to play puts off of. Where to? That key area of lower support. And what if we crack that level and move lower? Well, we already know how much lower we could go today on the SPY if we want to hold a runner for some extra profit, okay? So that's if the market opens and pushes on up into this overhead zone of resistance first. If we fail to break above it, we get stuffed, we start topping out, we have good price developments, we have a solid reason to get short. That's going to be a great low risk, high reward area to be looking to play puts today for the next leg down. But what's the opposite plan in place just in case? That's if the market opens, pushes on up into this overhead zone of resistance and breaks above it. As long as we see a great break above that zone and then we hold above it as great intraday support, that would maybe give us some confirmation at that point in time to go ahead and look to play calls on the SPY. If we break above and hold above that key daily zone of resistance, and if we see it turn into great intraday support, then where could we see the SPY get up to? Let's say we play those calls. Let's say that's the opportunity that presents itself today. Where can we see the market go next? Well, we have some potential to see the SPY get up towards around 416.99 to 417.36 here on the SPY today. Okay, so you have your key overhead zone of resistance, your top zone, 416.99 to 417.36. You have your current key line in the sand zone of resistance, which again is between 414.19 and 414.62. You have your key significant line in the sand support between 411.60 and 412.03. And then you have your bottom zone of support, which is going to be back down between 408.64 and 409.22. So really identifying these levels is pretty simple. Building these plans is really not that complex to say, hey, if the market comes here, tops out, of course we would play puts, okay? If the market breaks that level and holds it, of course we would play calls. It's not rocket science. It's actually pretty simple. But what's the hard part is actually being patient, okay? Being disciplined to wait for the market to come to you and be okay with missing every opportunity that you may see in between that may not be as high probability, may be subpar. So the biggest thing is your mindset, your mental attitude, right? Your high level of discipline. Can you be disciplined today? Can you regulate your emotions and not feel like you're missing opportunity to where you don't FOMO in? That's the hard part of trading. The technicals is actually pretty easy. So what it really comes down to is getting these zones identified, mark up the fact that you have 1030 data dropping today, and you're prepared. Do a market assessment. What's my market assessment today? It's like a 3 or a 4. Right? It's subpar. It's average. So how am I going to assess my risk today? I'm not going to be risk on, right? I'm going to be risk off and make sure that I'm really mindful regarding preserving my capital, not taking too big of losses today, not being too aggressive. And if I make great trades, then great. We make profit. Not going to be thousands of dollars, but again, I'm not losing thousands of dollars. I can lock in some great base hits and then add to the bottom line. But again, it just requires a high level of patience and discipline to wait for the market to come to you and then set up and provide us with an opportunity. And so again, we're here until 11:30. If we see these opportunities present themselves, we're going to break them down. We're going to educate you guys. We're going to build plans. We're going to talk the trade through and through, before, during, after, and make sure that we're all attacking this market and putting the odds of success in our favor, okay? So that's going to be the game plan and my analysis with the SPY. Those are my market expectations when I go ahead and try and assess the market conditions to the best of my ability before the market even opens, based on the technicals, where we're at, what we have going on today, what we have going on this week, and then looking back saying, hey, how many times over the past 2 years when we've had a Fed interest rate decision on Wednesday, how many times is the market historically choppy leading on up into that Wednesday? It's like 80 to 90% choppy. So that's how we get prepared. That's how we come in with a high level of confidence and clarity and are able to assess market conditions, and then from there assess what's our risk for the day, okay? How aggressive are we going to be? We're going to be aggressive? Not aggressive. Risk on, risk off. That's how we go through this process of getting confident, getting prepared for today's trading session. So with that being said, do we have any questions regarding the SPY, my levels, my game plans, my analysis, how I came up with these areas in the first place? Do we have any questions whatsoever regarding the SPY before we dive into QQQ. And we got 58 viewers over on the tube. So we need how many more? We need 42 more viewers, 41 more viewers now. And then we need to match those likes with how many people are in the stream right now. If we hit 100, I'm going to pick one person today, and I'm going to give you guys a free membership to our program. How do you get in that mindset to just not jump? It takes a lot of practice, years of work, and just a lot of mindset training. Understand your mindset, understanding how to rewire your neural pathways, your subconscious, right? Install a new way of thinking, a new way of feeling, a new way of acting and reacting. It just takes a lot of, deep inner work, a lot of practice to be able to, reinstall a new mental software. I always say installing a new mental framework, right? Install a new mental software, remove the conditioning and those limiting beliefs that you've been, conditioned with and installed over the years of your life. And it takes a lot of work to understand what that conditioning looks like, what those limiting beliefs are, and then from there, been able to, again, install a new mental framework, a new way of thinking, a new way of feeling, a new way of, making decisions and taking action, right? It takes a lot of work, but it's doable, right? I've done it myself. I've helped tons of students do this as well, and it's very beneficial to their trading to be able to come in and just sit back and not feel the urge to trade because there's just not any great opportunity. So, all right, do we have any questions regarding the SPY? So Stir inside the chat saying, basically, you just have to rewire your whole brain. Otherwise, it's simple. Technical analysis is really easy, guys. It's not rocket science to find support resistance, right? It's not. To draw a trend line, when you do it a few times, you know how to draw a trend line for the rest of your life. It's not rocket science. What is the hardest part about trading? Mastering the mental aspect of trading. That is the hardest part. And no one educates that. No one has any type of resources or education or curriculum or program to help traders specifically, right, master the mental aspect of trading. And that's 80% of what's going to drive your success is, can you regulate emotions, right? Can you come in and be very disciplined, right? Can you honor your word? Can you be a good loser, right? Can you do these things? 95% of traders cannot. And that's why the statistic is 95% of traders fail. So why do we mainly focus on mindset, the mental aspect of trading in the Market Mastery program? Because that's the make or break. That's going to be what makes you or breaks you when it comes to being a stock trader. Some people are just naturally disciplined, naturally emotional free. Some of this shit comes easy to people. It doesn't come easy to me, and it doesn't come easy to 95% of traders. That's why they fail. 5% of traders that succeed, they're just naturally disciplined. They have a really tough, strong mental framework, right? They don't give in to their emotions. They regulate them with ease. Some of these people just are emotionless beings, period, right? They don't really feel the emotions. They don't get emotional about things. That's the 5%, right? That end up succeeding because that's not a challenge. That's not a struggle, right? But 95% of traders that fail, I truly believe why 95% of traders fail is not their trading methodology. It's not their strategies. It's not what asset they trade or how much capital they have, which that's what the 95% of traders think. It has something to do with the technicals. I firmly believe with 100% certainty that the reason why 95% of traders fail is because they don't work on the mental aspect of trading. And that's what it was for me. That's what it's been for a lot of my students over the years. And that's why we've brought some of the brightest minds in the mindset space, the neuroscience space, into this Market Mastery program to help you guys master the mental aspect of trading. And so far, I mean, exceptional results within the program. But anyway, guys, let's make sure we are good to go before we dive into the Qs. Anything inside of chat? Tim, what's up, brother? Good morning, fam. Tim, day one, baby. I'm excited, brother. I'm excited. We'll let you guys in this Zoom right around 9:15. All right, cool. We got 72 viewers. I mean, you guys are pretty damn close. You guys are close. 30, is that 30? Not even. That's 29 more people, and we're going to pick someone to do a giveaway. So let's make it happen. All right, let's dive into the Qs. Again, same thing that we just discussed with the SPY. We don't have to go back into it. My assessment, market conditions, what we got going on this week. It's the same thing. I'm like a 3 or a 4 as far as my market assessment outlook. Okay? Am I risk on? No, I'm risk off today. So let's go ahead and dive into these key areas here on the Qs. And again, right from the daily, identifying these key areas and significant levels of daily support resistance. And then we'll just wait for the market to come to us and give us an opportunity. So key overhead resistance. This is your line in the sand here on QQQ is going to be between 348.84 and 349.13. Okay. We're able to break that key level, that line in the sand. Hold above it as intraday support. I would then be looking to play calls today on the Qs up into our next key zone of overhead resistance. That's between 351.14 and 351.36 here on QQQ. However, what's the opposite plan in place just in case? What if we come on up into that line in the sand, that key area of resistance on the Qs, and we fail to break through it and we have solid reason to get short? Well, we will simply look to play puts if that's the opportunity that presents itself. Where to? Well, looking at the Qs right on the daily time frame, I mean, we got a lot of great potential to fade and fall all the way back down to 343.65 to 344.09. So there is a big window between key resistance and key support, and we could see the Qs really drop on off hard and heavy. There's a lot of room to the downside, okay? And that's if we do not break that key overhead zone of resistance, if we top out and start to roll on over. And again, we know what the plan is. If we break and hold that zone, we'll just simply look to play calls. Okay, and again, it just requires a lot of discipline and patience waiting for the market to come to you. Let's not talk about RVPH, like at all. Let's not talk about RVPH, David, okay, because I was in RVPH as well. I was dollar cost average. I wasn't dollar cost averaging in. I was scaling into that position little by little by little by little because the press release was killer. But again, 8:30 drops. I have to close my position. I can't manage it while I'm here breaking everything down to you guys. And so I ended up having to realize a $490 loss. I ended up getting my cost basis well below $4 as I was scaling into key areas of support, looking for eventually buyers to move on in because I had a great press release. Nice low float stock. 10% of the stock's float is short. And at that point in time, we were trading the daily average. There was still a lot of potential to see a lot more volume really move on in to RVPH. And then literally after I close it, right at 8:30, what happens? The thing starts to rip, and that could have been a $2,000 trade. I had to realize a $490 loss. So yeah, it's a little unfortunate. Definitely not how I want to start my day, down $490, but I kept my loss nice and small. But again, my game plan was to keep scaling and scaling and scaling and scaling in. I saw the press release, great press release. It looked fantastic. And unfortunately, my cost basis was, again, sub 4. And now we're starting to see a really nice pop. And at this point in time, it'd probably be a couple $1,000 of profit if I still was in this trade. But why did I cut it? Because, again, my focus wasn't on the chart. My focus wasn't on the trade. My focus is now shifting to get you guys prepared for today. And sometimes that's just what happens, right? This happened 2 weeks ago. I was in a great trade. The break and hold over $1. Same thing. 8:30 sitting. I know I can't manage my trade correctly. I have to go ahead and get out. Made $180. That stock ripped 1,000% that day. Not saying I would have taken the entire 1,000% up. I'm not going to nail the bottom, nail the top. But my target was 150, 160. I ended up selling it at 110. I left probably $2,000 on the table. So it's unfortunate. It happens, but it's all good because the market will be live in about 27 minutes. And we will see what we have in store for today. But I'm glad that you're rocking and rolling with RVPH, brother, because RVPH was a really good press release. They announced positive top line results regarding their phase 3 trial. And you go through and just read that entire press release. A lot of great keywords in that press release. It was really good. And then you look at how much volume it was trading. It was trading right at the average. We still had potential to see a lot more volume move in. And would you look at that? There's a lot more volume now moving on in. Nice low float stock. And again, 10% of the stock's flow was currently short. And so I'm like, this is a great opportunity to start scaling in down here around that $4 region for that next pop through 5 up to $5.90 to $6. And that's where I think you're going next on RVPH. If anybody's still in this, is going to be RVPH, right? $5.90 to $6 is your next target. Then $8 to $8.75 would be your third and final target today with RVPH. But you guys are all set there. RVPH has a lot of great potential. We'll discuss this one if you guys are watching it. All right. So, there we go, Mr. Joey. I love it. I'm actually going to save this image because I should probably have it. Oh, I already have it on my desktop. I saved it last time. We're good. So, you guys are good. Do we have any questions regarding Q and my analysis on the Qs? Jim, Quinn, Brian, Stefan, Jacob, good morning over on the tube. How you guys doing today? Inside a chat before we move into my one large cap option play for the day. Do we have any questions regarding the SPY, the Qs? If so, go ahead and type those up. In the meantime, I'm going to sulk and just watch RVPH while I cry internally. And I'm just going to sulk a little bit. Just let the tears come out. And just be okay with this move up to $6, my target. Don't go chasing waterfall. That's a very depressing song. It's the first song that came to my head. I don't know why. But it's okay. It's okay. I only had 2,000 shares. It's only up $1.50 from my entry. All right. You guys good? We're good. All right, let's go dive into UPS. Yeah, literally, there's one stock today on the large cap watch list that looks decent. And that's going to be UPS. I mean, I looked at 50, 60 stocks today. Nothing stands out to me. The only thing that stands out to me is UPS, but I don't even know. Rayo, I'm banning you today. Look at it. He's like, I'm already in RVPH when it dipped. You're getting banned today, okay? You're not getting any stream today. So have a good one, brother. I love you so much. We'll see you tomorrow. Dan. UPS is the only thing that I see that looks decent, all right? And the reason for that is look at this big old massive daily gap. Go all the way back to 2020. We had this high right there at 124.30. We gapped up and put in a low of day at 135.15. That left a big old $10 gap on UPS. And over the last couple of years, we've been moving up. Now we're moving down. Where are we coming into? That gap level here on UPS. I love trading gaps. You guys, if you know anything about me, I love trading gaps. The same reason, we were taking Meta on Friday, and a lot of you guys made some great profits on Meta. We took it long for the daily gap fill, and then some of you guys were taking it short for the daily gap fill rejection. I love trading gaps when we have gaps. I'm letting out the frustration with RVPH. So when I look at UPS, I'm like, oh, yeah, look at that big old gap. We could fill the gap, and there's 10 points of downside potential. Okay, so with that being said, I'm looking for a crack below and a hold below that low of day right here from that gap up low of day. That's at 135, what was it, 135.15? I got it marked up as 135.14, so it's good enough. So basically all I'm looking to see UPS do is get a solid crack below 135.14, right? Want to see it move through that level with strength. Would like to see it come back up and retest that level and fail to get back above it. If we see a strong crack below this level, or if we open below that level, because we could open down here at 134. We may open up here at 137, right? But it doesn't really matter. If we crack below it, as long as we stay below 135.14, I want to be playing puts, not only for a day trade, but maybe a swing trade opportunity, because we have a lot of potential to fade and fall. So I'm going to just go ahead and go 30, 45 days out on puts and lock in a majority of my profits along this day trade opportunity. Okay, and then hold a little bit for a swing trade if I'm positioned correctly. So when I do a day trade to a possible swing trade, I always go 30, 45 days out. That's just my minimum. I usually lock in about 70 to 80% of my profit if it's a profitable trade as the day trade. And by the end of the day, I'm still asking myself, do I want to hold what's left over, right? If I hold this position, whatever I have left, and it goes to zero, can I still walk away from this trade profitable? Am I in a free trade right now. How do I get to a free trade? Well, if I go 10 contracts and we get a $5 drop and I take 8 of the 10 contracts, if those other 2 contracts go to 0, I'll probably still be green on the trade. I own a free position. So that's how I'm looking to get positioned here on UPS, is a possible day trade that can turn into a swing trade. So going 30 to 45 days out minimum, right? Taking a majority of my profit intraday, and then if I see fit, I can still hold a little bit of that position overnight for the next week or two and see if we completely come down and close that gap. And if they go to 0, they go to 0, right? And I still walk away from this trade profitable if this is done correctly. That is the only thing right now that I'm seeing here with UPS, okay? Or just really with any stock that I looked at this morning. Those 50 to 60 stocks on my watch list, I reviewed every single one, and this is the only thing that really stood out to me, right? And I start with the daily. And do I see anything at first glance? Well, at first glance, UPS really stood out to me. This is the only thing that I see right now at this point in time that looks good. So with that being said, I got UPS on watch, okay? Decent potential here. We got the SPY and the Qs on watch today. Again, my market assessment, 3 to 4, which means I'm going to be pretty risk off, be super patient, really wait for the best of the best opportunities to present themselves and come to me. And then from there, attack the market if there's a reason to jump on in. All right, guys. So that's what we got in store for today. What do we got going on in the economic calendar? Earnings, my outlook, overview regarding the entire market, not just for today, but really the next few days leading up to the Fed's interest rate decision. Or what's my game plan and analysis with the SPY and the Qs? And then what else am I looking at? And then what are my game plans with those stocks as well? So you got the game plan here with UPS, the game plan with the SPY and the Qs, your key lines in the sand. So you guys should be super prepared, really dialed in, very, very confident, and ready to attack this market strategically and put the odds of winning in your favor. All right, so let's do this. Everybody inside the chat, if you guys have a stock on your watch list, go ahead and type it up and let's get it reviewed. All right, if there's anything that you're looking at, go ahead and type that ticker up. Let's get it reviewed. And make sure that we're all set, ready to rock and roll for market open in the next 18 minutes. And if you guys are on YouTube, if you guys are on the Tickety Talk, and you guys want to learn more about our trading education program, Market Mastery, working with us, go click those links in my bio, learn more. You can book a call with me or one of my coaches, and at least explore the programs, what they entail, how they're beneficial to you. And again, you have an opportunity to talk to me or one of my coaches, which is pretty cool as well. Learn more. And maybe we have the opportunity to work with you guys. Tim, brother man, what's up? Day one. He's in the house. He's ready to rock and roll. Look at Tim. He's ready to go. I cannot hear you. Let me turn my my mic up. Maybe it's your mic, but I'm on 50. That was you. I can hear you loud and clear now. Let me turn you back down. You're screaming at me. What's up, Tim? How you doing today? So not feeling 100% today? What would you say on a scale of 1 to 10? How would you rate your overall just mindset today?
Actually, after starting market mastery classes and starting on a routine of waking up a little bit earlier, starting with a cold shower and meditation, I actually feel probably better than I normally do when I'm not sick.
Hell yeah, man. I love it, dude. It's interesting, like just doing these small things in the morning before you start your day, just how much more like mental clarity you get, you know, for the whole day. So that's awesome. But the reason I asked him, it's like, you know, you're not feeling well, you're maybe not running at 100%. And so I always do what I call a mental assessment in the morning. How am I feeling? Did I sleep good? Did I do my morning routine? How am I feeling? And if I'm like a 5 or a 6, I'm definitely not trading, you know, but if I'm like 8, 9, or 10, I feel pretty good. I'm ready to rock and roll. So on a scale of 1 to 10, what would you say today?
About an 8. It's mostly the voice.
Gotcha. Cool, man. So you're ready to rock and roll. You're dialed in. Do you have any questions regarding the analysis on the SPY? I know you can't trade QQQ, so you're mainly looking at the SPY, which is mainly what we watch as well. You feeling pretty good about these levels, the game plan, the overview? Feeling pretty prepared?
Oh, yeah, definitely.
Cool, brother. And anything else on your watch list that you're looking at today, or just primarily the SPY?
The only other thing I've really been watching is IWM.
Gotcha. You looking maybe long or short on that?
On a day-to-day basis, doesn't really matter, but yeah, in the long run, it's short.
For sure. I always like to ask, because if you're like, you know what, I'm super bullish today. Like, I just want to play calls. We're going to have the conversation about removing your bias in the morning. Coming in super neutral, not bullish, not bearish. Just coming in neutral. And then basically just waiting for the market to give you that opportunity. But, yeah, if you're watching IWM, I mean, you've obviously, came down into a lot of this daily support that we've been tapping for the past, year now. Right around this 162.56 to 163.31 zone. You come down, tap it, come down, tap it, come down, tap it. Even last Thursday came down. Actually, Wednesday and Thursday, you tapped it, a little bit of a bounce, tapped it, a little bit of a bounce. Now you saw like pretty strong crack down through that zone. So that's going to be a key area to, really keep on watch today. If we scroll left, the first thing that I see if I go left, I see that nice little gap down here on IWM. That's between 155.87 and 157.77. So it may be worth just getting that gap zone identified, because who knows, maybe we come on down and see a great intraday reason to get short to fill that gap if we ever see that take place. So we got current support, lower gap zone. Let's go look at some overhead possible resistance here. Yep, and the first area that I'm seeing is going to be this little zone right here, teeny weeny zone. Right. Come on, get it, click it. That's very tight. It's like 167.45 to like 167.72. We could probably open that up a little bit more, actually. We can come down and grab all these lows, low, 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 low. Couple highs from 2 weeks back where we topped out, got the next leg down. So at least we get established a couple of, pretty key significant areas. I mean, right from the daily. And just always looking back to see if it, lines up with any other points. But that's what I see. And then I go right into a 5-minute and say, okay, cool. We're gapping up today. Nice. So we're gapping up. What are we gapping up above? Well, that first initial zone that we identified, just right back off of all of these weekly lows that we've hit 1, 2, 3, 4, 5 times from last week. And so that's how we identified that key zone right here. If you go back and look at the 5-minute, we actually see that we're gapping above that zone. So that's going to be what I call a line in the sand, right? That's like a make or break. So if we are now gapping above that zone, and that's a daily zone, it's going to be some intraday support. So if we see that zone hold on up, the highest probable outcome above that key line in the sand support zone would be, hey, probably see the market try and push off that zone for the next leg on up. We have that daily zone that we identified up around that 166.75 to 167.72, but we are going to have a pit stop before we hit that zone. And we're just going to go back and look at some of these prior highs from last week. We're going to go back and look at Thursday's high, a little bit of that double top, big rejection, back up for the retest, rejected to the penny, nice big drop on off. So that's going to be another area as far as resistance. I'm going to remove that daily zone, and I'm just going to focus on this intraday zone because it's pretty solid from last week. That's going to be between 165.51 and 165.77. So if we hold that lower zone of support, and again, that's a daily zone, and we have great confirmation, right? Multiple reasons to get long. We can get long up into the 165.51 to 165.77 region. But if we fail, oh no. If we fail to hold this zone today, and we crack below it, stay below it, that would be your confirmation that we would most likely start to see our next leg down here on IWM. Something else that I see as well, Tim, is if you go back and look at last Tuesday, and I wonder if we can draw that out even further. No, just go back and look at last Tuesday's high a day, and then go look at that high from Thursday where we hit that key zone of resistance. It was also that downtrend right here that we tapped it 2 times. Nice rejection on Thursday, came back up Thursday, tapped that zone again, and that downtrend. And we see how price has really been reacting off this trend line, even in pre-market there Friday. So that's going to be another key significant level to keep on watch, because we have 1 valid point, 2 valid points, 3 valid points, 4, 5, 6 valid points, price actions respecting that downtrend. So that's another thing to watch as well. You know, when we're below a downtrend, we're considered to be bearish, right? If we can break that downtrend, we can go to the bullish side. And obviously when we break a downtrend level of resistance, that's when buyers can really start to move back in and see that next leg up. So, you know, kind of how I would come in and assess this is like, yeah, if we can hold that zone of support and break that downtrend, that could bring in a lot of buying volume, and you could see buyers push this back up into that next overhead zone of resistance if we are able to break that multi-day downtrend. So what I like to do is, again, Tim, just kind of like see what you're looking at, come in unbiasedly, and just do some TA based on what I see, and then just break it down, explain it from an educational standpoint, and then maybe I hit on something that you did not see, and you're like, oh, crap, that makes a lot of sense. I need to be mindful of those levels. Or it just backs up what you're already looking at in the first place. Oh, 100%, man. Absolutely. But most of the time what we come to find out is your guys' TA is really, really on point, and just me coming in and taking a look at what you're looking at just revalidates what you're already looking at in the first place, or I see something that you didn't see that can help revalidate your trade. Or maybe you say, hey, you know what? I didn't notice that. Good point. Maybe I just want to be a little hands-off today with it. So, Anthony, what's up? Corey, Stir, what's up, traders? Good morning, Anthony. How you feeling today, man? You sound like you're feeling good. Feeling real good? I love it, man. So I see Chris posted up that message in Slack. Your weekly goals and intentions for the week. What's everybody's goals and intentions for this week? Hell yeah. You crushed that morning routine today? Nice. I love it. Love it, man. Love it. Corey, what about you, man? How you feeling today? Ooh. Oh, you're off work. It's Monday leading up to the Fed rate decision. Like, why couldn't you just have Wednesday off work? Yeah. I love it. Yeah, especially if the market's not doing anything. That's probably what I'm going to do is, you know, cut out, not come back this afternoon, and spend all my day in the gym. This week? Gotcha. Oh, next week. Yeah, man, take those vacation days. Get out in the stand, man. You enjoy doing it. All right, guys. So if you guys are on YouTube, appreciate you guys tuning in to the pre-market rundown. Getting you guys prepared for today, the overview, outlook, analysis, the game plans with the SPY and the Qs. Other than that, guys, enjoy the rest of your day. Trade smart, trade safe, and we'll see you back here tomorrow morning on the tube, 8:30 for the pre-market rundown. So peace out. Take care. Happy, safe trading. Have a blessed rest of your day, and we'll catch you back here tomorrow morning at 8:30, guys. Take care. Ooh, we got Zach in the house. How's Zach feeling today?